This is a very brief review of consigned inventory. Consigned inventory is inventory that is shipped or provided to what we call a consignee. The consignor still retains title to the consigned inventory, and the consignee in effect acts as an agent in selling that inventory for the consignor. So what we're going to do is we're going to look at both sides of accounting for consigned inventory. So we're going to start off with the consignor, and the inventory then is transferred to the consignee. We have to remember that inventory, the title is still held by the consignor. So when the inventory is consigned, there's no cost of goods sold or any type of sale or anything else registered, recorded with the consignor. What the consignor typically does is they remove the value of that inventory out of the general inventory account and put that into a consignment inventory account to show that it's being separately held by an agent. And you'll notice there's no entry on the record on the transfer of inventory. Now, any cost of transporting the consigned inventory is typically, when I say transporting, that's transporting cost or other cost, is typically borne by the consignor. If that's the case, what happens is there's a debit to the consignment inventory for the value of those costs, and a credit, in this case I made to cash. Could have been payables or any other type of liability account, but the debit goes to the value of consignment inventory. And again, the consignee shows no recording entry because, again, they're receiving that consigned inventory, but there's no transfer of title or anything else, as the consignee acts as an agent for the consignor. Now, let's assume the consignee sells the inventory. Okay, if we go back to the consignor, of course, a consignee must tell the consignor that they sold the inventory. So what happens is the consignor makes two entries. The first one is to debit accounts receivable, and that's to recognize a receivable due from the consignee for those consigned goods that the consignee sold. And the credit is to sales. We also will debit cost of goods sold to recognize the fact that that inventory now is owned by the customer that the consignee sold the inventory to, and we would credit consignment inventory. Now, on the consignee side, they do make a journal entry, and this is in general the entry they'd make. They would debit accounts receivable for the sale to the customer. In other words, between them and directly with the customer. Don't get that confused with the accounts receivable of the consignor. That's a consignor creating the receivable for what they're going to receive from the consignee. In the case of the receivable recording for the consignee, that's between them and their customer who bought the consigned inventory. We credit accounts payable, which will then recognize the liability to the consignor for the consigned merchandise the consignee actually sold. And then the last part, the difference, would be the credit sales commission revenue, which recognizes a commission that the consignee is going to earn on that consignment sale. So that's consignment accounting in pretty much of a nutshell. Okay, let's go ahead and try question number 1 on consigned inventory. Number 1 says shipping costs paid by the consignor should be recorded as. You're given 4 choices. Go ahead and stop your video and make your choices. Okay, the answer to number 1, shipping costs paid by the consignor, should be recorded as C, inventory cost to the consignor. Remember that the costs associated with either transporting or getting consigned inventory to the consignee that are borne by the consignor need to be added to the consignment inventory costs. Let's take a look at number 2. And again, this will take you a few minutes. There's a lot of detail. Go ahead and stop your video. Okay, number two, it will make a lot more sense if we go over the details before we go over the answer. So during the year, United Electronics consigned 200 computers to retail outlet. The list price for the computers, in other words, what retail was supposed to sell the computers for, were $2,000 each. The United Electronics inventory value of each of the computers was $1,000. Now, under an agreement with retail outlet, United would pay a 20% commission on sales, and United would also pay to ship $3,000 to ship the 200 computers to retail outlet. At the end of the accounting period, retail outlet notified United that they had sold all 200 computers at list price. So the question here is, what amount should United recognize as consignment sales revenue for the period ended? And in this case, the answer is D, $400,000. And here's how we arrive at that number. First of all, you in effect, the retail outlet sold for United on behalf of United Electronics 200 computers at $2,000 each. That means we had a total of sales revenue of $400,000. Now, if we look at the journal entry transactions, they'll be recorded by United Electronics. We're going to see this. We would debit accounts receivable for $320,000, which represents the net amount that United Electronics would receive, which would be the $400,000 sales price less a 20% commission. We see that recorded. Debit accounts receivable $320,000, commission expense $80,000, and sales $400,000. So our sales amount would be $400,000, and we'll talk about that also just in a minute. Also, we would debit our cost of goods sold for $203,000 and credit consignment inventory for $203,000. That would be a combination of the $200,000 worth of the $200,000, which would be our 200 computers times our $1,000 inventory value, plus the $3,000 we had paid for shipping those computers off to retail outlet. Remember that the consignee simply acts as an agent for the consignor in selling consigned goods. So sales revenue from the consigned goods should be recognized by the consignor when the merchandise is sold, just as if the consignor sold it themselves. Now in this case, the transportation cost are consignor inventory cost, and commissions are actually selling expenses, and they are not used to compute net sales revenue. That's why it's $400,000. Our transportation and commission costs are both respectively inventory and selling expenses. And that is the end of our review on consigned inventory.